Crazyl, Deals on You, MyDala and Google Deals. Their discounts are a frugal Indian consumer's dream come true, and their diverse product portfolio a treat to the eye. The group buying boom is clearly here, and how. But as budding entrepreneurs rush to join the bandwagon in India, the group buying success story may have come to an abrupt halt. Less than half the sites in India still survive, while more than 50 sites unceremoniously pull the plug on their unsuccessful ventures. Dissatisfied merchants, discount-hopping consumers, and a shaky business model that is facing the ire of marketers and experts across the globe. Nikita Saxena spoke to a variety of people to find out more about this e-commerce joyride that seems to have slipped into a coma.
They came, they saw, they conquered. Be it Groupon, Living Social, WagJag or TeamBuy, group buying sites took the internet world by storm. What started as an e-commerce startup called Mersetta in 2000 by Microsoft co-founder Paul Allen, only to shut down in 2001, was then touted as the biggest shift in the e-commerce industry since PayPal, changing the landscape for business and consumers everywhere. Closer home, entrepreneurs jumped onto the group buying bandwagon with a surge of more than 50 group buying sites in India and a staggering 6,000 in China in 2011. But if this seems too good to be true, it's because it was.
Join Groupon.co.uk and find some
Amidst much controversy, Groupon recently declared a loss of almost $43 million. And China saw nearly 3,000 sites being wiped off the e-commerce map. Less than a handful of players including MyDala, Deals on You and Crazyl still survive in India, as Taggle, Masti Deals and Dealzevo amongst countless others have become casualties of a lost battle. Have the cracks in an inherently flawed business model finally begun to surface?
A lot of these sites, the smaller sites, are being bought at by the bigger guys, often because the smaller sites just aren't making any money. Bigger guys might not be making money either, but they've got the deep pockets and they've had that investment boom through 2011 to build up their war chest, if you like. And that's the thing that is probably most concerning with companies like Groupon, is that they raised a lot of money from investors through 2011 and 2010 for that matter, and they've been burning through that at a reasonable rate. And so now we're seeing them cutting back their labour forces. We're seeing China that the leading group buying site there is looking at 70% of its staff being laid off. It's this consolidation is going to accelerate.
If it is about being the lowest price, which essentially you're talking about, having the best discounts, etc., then you get the customer accustomed to looking for the lowest price or the best deal. If everybody in the market is in that mode of offering the best deal, then it's a race to the bottom. It's not really about creating any superlative brand or customer experience in it.
As sites and brands alike fight to offer the best price, repeat purchases amongst bargain-hopping consumers is a laughable idea. Add to this minuscule profit margins despite high buying volumes on most of these sites and a low ROI for merchants. One of the major flaws in the group buying system is that merchants do not have any reason to repeat their deals with the website. For instance, a merchant doing well on a group buying site would move on from the discounted model and charge unit price for their products, having achieved the objective of building a loyal consumer base.
In fact, probably advertised on group buying websites nearly 4 times, and each time we've tried to track what percentage of guests who've come in through group buying websites have continued to visit us, and those figures are in low single digits, not really worth talking about. Many of the brands that were presenting offers on these group buying sites never really lived up to the standards that they promised. So on any site that you went to, you would have merchants advertising themselves as though they're top of the line, but as a consumer, when you went in to try their service, it probably didn't really match up to expectations.
Adding to the merchants' woes is that there is no scope for differentiation on the basis of quality. Hence, Tier 1 brands are often clubbed with brands from a lower bracket and might lose out because they are priced higher.
The starting point for any discussion with a group buying site is that we accept discounts of only 60% or more. So, you know, you're almost forced to offer a discount that's abnormally high. You know, repeatedly being present on group buying websites is also detrimental, because then you start acquiring this image of being a serial discounter.
The sites themselves are struggling in a space that is overcrowded with players and a model that suffers from high merchant attrition rate, lack of benchmarks in India, high customer acquisition cost, and a requirement to drive high volumes to stay afloat. In an unexpected twist to the tale, erstwhile market leader Snapdeal has also undergone a remarkable transformation, rebranding itself as an e-commerce company and not a deal site.
This is just yet another manifestation of the Indian e-commerce story, which is give customers all the discounts, don't expect any loyalty, and spoil them. So what we've done, what every site has done, it's great for consumers because everybody is digging into their own pockets. You know, I understand that even the biggest e-commerce sites and Flipkart and others lose 200-300 rupees in cash or more per transaction.
Globally, the group buying phenomena is showing all the signs of going into a coma. Investors, merchants and vendors alike are waking up to a venture that seems destined for doom. The group buying model clearly needs an overhaul and a better value proposition. And by the looks of it, should also sound of warning bells for e-commerce entrepreneurs and startups that are now springing up dime a dozen before they head for the same fate.